Good. So this is how our books will look like. Now in exams, you may not be required to do all the years, no, especially for your final account. Final account is for that particular year. So for final account, it will be like this. It will be for this year, like this, like this, like this. So only this you need. Have you seen for final account, the very first year? So take notes for us. Good. Now let's move on to the next. I won't clean the solution for comparison purposes. Let's go and do the other method. So we said that for capital grant, there are what? 2 treatments. Kindly write the question. There are 2 treatments. The first one is what? Is a deductive. That's the simplest one. Now let's go to a bit complicated one. Not too it's also good. So, but that's what normally comes in the final account. So for final account, that's what normally. Likewise, you can also use this for final account. So the other method, that's the B. We call it deferred credit method or deferred income approach. Deferred what? Credit or deferred income. So deferred income approach. So deferred income approach. So here, let's see how you will treat it. So for deferred income approach, first, if that's your first time recording, so that one to first, add it to cash. I think I used 1 there, so let me use 2 here, and let me still contain my A. Add it, oh yes, add it to what? Your cash and cash equivalent. So take notes, your cash and cash equivalent. Then B. Now B. The asset is depreciated on full amount. Wow. The asset is depreciated on what? Full amount or the original cost. Original what? Cost or the full amount. Good. It means that the grant is not subtracted. No, we don't subtract the grant over here. No. But instead, what do? That's the first. Second, the grant is what? Amortized. Amortized over the useful life. What the useful life of the assets. Good. So, in fact, the issue is that you depreciate the grant, you depreciate the assets. Yes, that is it. Just that we don't say depreciate grant. Probably the right term is what? Amortized. Because grant is intangible. The PP, the asset is tangible, the plant is tangible. So we depreciate what? The tangible asset, and then we amortize the intangible. So that is it. How we get it? So grant is amortized over the useful life of the asset. And what? Every year, I like this, every year or every period, every year, a portion is what? Released to the profit and loss account, the profit or loss account, to offset the higher depreciation or to offset the depreciation. Good. So that is it. So copy it and let me know when you're done, because I'll clean this session and then work this solution here so that we can compare the figures. In fact, the final answers are the same. Yeah, the final answers will be the same. So I'll do that. So kindly copy it for me. Good. So let's solve the same question using this method and see how it looks like. Now be with me, it's a bit tricky. So what can you do? The only issue happen here, the grant will be depreciated on its own, that's amortized on its own. Asset will be depreciated on its own, and then you allow both to set off themselves. So that is it. So I'll do that one here so that you compare it probably for yourself. So here to solution. So this is the deductive method, and this is the method 1, and yes, method 2. Method 2. So still P&L, what to go there? Here, no workings. So our year 1, year 2, year 3, and then year 4. So the P&L first, we will talk about depreciation. Oh yes. So here depreciation should be based on the original amount. The asset should be depreciated on the original amount. The original cost of the asset is what? 100,000. How do we get that? The original cost of the asset is what? 100,000. Good. So divided by what?
100,000.
Yes, divided by what? 4 years. And that gives us 25,000. So your depreciation will be what? 25,000 per year. 25,000 per year. So 25,000 per year. Then you also have to amortize a grant. So you write grant here. If you want to amortize a grant to the amount is 40,000. You amortize it over the useful life of the asset, which is what? 4 years. So the useful life of the asset is what? 4 years. So it will be 40,000 over what? 4. And that one also give us what? Also give us that
10,000.
is 10,000, right? Good. So the grant, this one will go to other income, right? Oh yes, the grant will go to other income. So 10,000, 10,000, 10,000, and then 10,000. Good. In fact, the answers will be the same. The final answers will be the same. So that is it. Now we are done with the P&L. Let's go to financial position. Obviously, that is so easy. Even though this is the challenging one, it's so easy. It's so easy. When you go to the financial position, year 1, year 2, year 3, and year 4. So first of all, let's start. The asset, cost of the asset, the non-current asset session. So non-current asset session, cost of the asset will be the original cost, the 100,000, the 100,000, the 100,000, and the 100,000. Good. Accumulated depreciation, ACCDEP. Yes. So here will be what? 25,000 each year. So 25,000, 50,000, 75,000. Good. And what? 100,000. Okay, so good. What do you do again? Carrying amount of the asset. C. Carrying amount. C. Chartered accountant. Come again. Does not mean that you write the exams again or no. Our exams, you write it once. So that's not the come again they want. Okay. Now when you subtract what you get, 75, that's the carrying amount. Here will be 50,000. Here will be 25,000. And finally, 0. Oh, yes. Because 100 minus 100 is 0. You are done. Let's go to the current assets. Now I'm going to the current assets. Current assets. Have they received the money? Oh, yes. The 40,000 is in our account. So the first year they receive the money, you have to record the 40,000. We call grant. So 40,000 cedis, which is the same as this. The same as this, right? Good. Then you go to non-current liability and non-current, then current liability. Then write public grants under each of them. So let me put total liability here. Can you see that one? Good. Let me stretch it. Wait, downwards. Good. So total liability. Now, be with me. What I'm going to do is the technical aspects that make this style a bit troublesome. But all your final accounts, I can assure you that this is the one that will probably come. All your final accounts, I can assure you that, this is the one that will probably likely. So now be with me. Now everybody will respond because this is an interesting area. Now the entire grant will set aside as a liability. We will defer the grant. Yes. We put a grant here and every year portion. So the entire grant received is how much? What's the entire grant received? Yellow.
Yes.
The entire grant is how much?
Let me see the question.
Hey. The entire grant is 40,000. The example that
40,
I saw.
right?
Is what?
40,000.
Good. The entire grant is 40,000. And we've even amortized it over here. 10,000, 10,000 throughout. Now, at the start of the year, we owe, the asset will last for how many years? 4 years. So it means that we owe a government a condition of what? 4 years. 4 years condition. 4 years what condition? That's the assumption behind. So it means that we are going to spread this one over 4-year period. So at the start of the year, we have received 40,000, but we have only capitalized or earned 10,000 out of the 40,000. So how much do we owe?
30.
Good. So that's the total liability. Total liability is what? 30,000 because the entire grant is what? 40,000. We have what? And 10,000, or we have amortized or released 10,000 into this year's income statement. We've certified the 10,000 of the condition. 11 what? 30. In fact, out of this 30, a portion is current. This one is a total liability. A portion will be non-current liability and a portion will be what? Current liability. So that's why I've written non-current. I've written what? Non-current and put grant under it. So the part of this 30, which is what? Non-current. We said the non-current liabilities, they are liabilities that due for settlement or go beyond 1 year, and the current is within a year. So always the current liability is the grant that you are going to release next year. So how much are you going to release next year?
10,000.
Good. And it's the same throughout. So the current liabilities are the same. So 10,000 released next year. So out of the 30,000, if current is 10,000, then non-current you got
20.
Yes. In fact, if I understand this part there, I'll be happy. So here's what? 10,000. Current, I'll put 10,000 here. And come here and put what? 20,000. And this game will continue. Oh, yes. And let's go to year 2. The second year. Let me write this small. And I can go there. So 30,000, 10,000, and then 20,000. Now let's go to year 2. When I go to year 2, the entire grant is 40. I have released what? Oh, what's wrong? That will not come. I've released 10,000 year 1. I've also released another 10,000 year 2. So in total, I've released what? 40,000. I've released 20,000, right? Meanwhile, the entire grant received is what? 40,000. So what's the total liability left? For the year 2. Sicho, what will be the total liability for year 2?
Total liability.
Yes.
Hey, it's not around. Total liability. For the one that is yet to be, if you say the total liability that is being carried to year 2 is 30,000.
Good. So we are owing 30,000. So when we go to year 3, we release 10,000. So left with how much?
Will I be 20?
Good. So left with 20. Or you can get this 20 by 2 ways. First, the entire grant received is what? 40,000. We are at the end of year 2. How much have we released? We have released 1, 2, making 20.
That's 20, yeah.
So if you release 20, so left with what? 20. So we are owing government 20,000. That's the implication.
Mm.
Or second approach. At the end of the year 1, we are owing 10,000. If you push to year 2. Year 2, if you release, we are owing 30,000. Year 2, if you release 10,000 out of the 30, so left with how much?
20.
Good. In fact, it means that it is the current one now which has been released. So this one will be released here, and then this one will come here like that. So out of the total, which portion is the what? The current liability.
The current is 10.
Good. Always, it will be the one you are going to release next year. And then the non-current will be what?
10.
Good. And when you go to next year, what do you think happen next year?
Same thing will happen. 10,000 will be released. And the total liability will be 10.
The total liability will be 10,000, right?
Yeah.
And then what will be the remainder?
10.
So if the current is the one you're going to release next year is 10, and now it will be the one that should come first. What about non-current liability?
It's 0.
0. Oh yes, because you're going to 11 10,000, and that's what you're going to release next year, and that's it. When you go to the last year, here will be 0, 0, 0. I'll be
Current will be 10. Oh.
The last year there will not be any liability because
Okay,
all the
there will
grants
not
have
be
been released in
liability.
the income statement. I'll be get that.
Yeah.
I hope everybody gets it. Good.
Yeah.
Now in exams, this is what we want. This one I just brought it to help you to do the computation well. So let's assume that this total is not there. If you can still get, so this is how we want the solution. Just go to non-current liability and then show us the component of the grant that will be there. Or if you think it will confuse you, we can just sum them up and show one. But place it under the non-current liability. You can just add them 30,000, 20,000, and 10,000 under the non-current liability. With that written into 2. But please do that for me, okay? And then you'll be fine.
Okay.
So this is the accounting treatment. I'm done. We are saying that whatever you do, the answer is the same. The net position is the same. Let's start with the income statement. When we use the deductive approach, we had a depreciation of 15,000. But when we use the deferred income approach, depreciation is 25, grant is 10. So the net depreciation was 15 because this one is an income. This is an expense. So the net amount is 50 throughout. So whichever formula we use or formula that you use, the answer is the same. But please, this is the one that in exams you may be asked to use most often because of this rating. How to break a current liability, how to break a liability. Because of this, we like this.
Okay.
Now let's come in. You have for the first year, you have an asset of non-current asset of 75. Okay.
Yeah.
Non-current asset of 75 plus asset of 40. That gives us 100 and what? 115 assets. And then you have 115, right?
Yeah.
So the total asset will be 115. Then you have a liability of 30. So what will be the net asset? Less 30.
75.
It will be what?
Oh.
It will be 85.
85.
85. Because 100
yeah.
115 less what? Less 30. These are liability.
Yeah.
So it will be how much?
85.
Good. When you come here for the year 1, we have 40 here, we have 45. Putting it together, 85. So whichever approach you use, the answer will be the same for you. Now let's go to the year 2. We have 50 assets. Liability is 20. So left with what? 30, right? Good. So the net asset will be 30. When you come here to is what? 30. When you go to year 3, we have 25. And then a liability of 10. So the net balance is what? 15. So year 3 is 15. When you go to the final year, everything is 0, 0, 0. So there's no balance there. Here too, 0. There's no balance there. Whichever approach you use, the answer will be what? The same for you. Now let me explain a few tricks with this when it appears for question number 1, especially when you're doing this approach. So good. Now when we go to question number 1, this is how we will only give you the grant. We will tell you that a grant of, let's say, 10 million was received to acquire an on-current asset. The useful life of the asset is what? 5 years. We will tell you the cost of the asset. Wow. We will add the cost of the asset to the general pool of the asset. So the cost of the asset is hidden from you. Why? Because it's already accounted that section. So take note, the cost may not be given to you in the footnote. If the cost of the asset is not given, then asset section might not be needed. So this one will not be needed. The asset section, yes, may not be needed. This will be in a PPE schedule. It will appear in a PPE schedule. So the grant section, you need an executive grant. That's all. So it makes the exams one look a bit easier and cheaper. So take note from me. Now let's back with illustration. Let's go to success. Now let's go to success limited. That's question 1. Success limited. Question 1, success, where are you? Success, where are you? I thought I opened it right now. In fact, please, the notes on the standards, all the illustrations in it, the one with the solution, please, they are yours. Tackle all of them. The one with the solution, yes, tackle all of them. These ones are the practical questions. Where is that? You have close that one now. Okay, so now let's see success limited. Okay, so success limited, I have mine here. Good. So success limited is question 1. Or even question 2, because there's none there. So success limited question 1. Let me look at the grant over there. One of the notes, either note 4 or note 6 or so. Note 2. Good, note 2. During the year, the company received a grant of 20 million to finance the acquisition of what? Some plants. And this has not been recorded. The grant aspect has not been recorded. This, the grant aspect. So that the asset aspect has been recorded. That's why I didn't give you the cost of the asset. Please, the 20 million is not the cost of what? The asset. There is the amount of the grant received during the year. So this 20 million is the amount of the grant received, not the cost, to finance the acquisition of some plants. So it makes it what? A capital grant. This has not been recorded. It is the policy of the entity to account for a grant relating to assets using what? The deferred income method. That's the one guy. Good. The plants have an estimated life of what? 5 years. So with this, how are you going to treat it? Only 2 treatments. Only two. The grant is 20 million. So you need only the first year, just the first year. So the final account, you go to other income and say grant. In bracket, the 20 million divided by what? So that will be 20,000 divided by 5 years. That will give us 4 million. So 4,000 should be shown under what? The other income. Good, you're done. You go to your financial position. Now, when you go to the financial position, when you go to the non-current liability section and current liability, the entire grant received is how much? Teacher, what will be the entire grant?
The entire grant is 20 million.
Good. So a portion has been released to the income statement, which is what? 4,000. So let me know how much?
It will be done with 16.
Good. Out of these 16, we have to break it down. A portion is current, a portion is non-current. So what will be the non-current portion and then the current portion?
The non-current to be 12, the current to be 4.
Is that?
The non-current to be 12, the current to be 4.
I like that because the one that we are going to release next year is also 4,000. So right here, and now we got 4,000. Out of the 16, 4,000 is current, non-current to be what? 16,000. Sorry, 12,000, and then you are done.
No.
How we get that? So with that note, these are the entries that you have to pass, and then you are done. So that note is cleared. Now your work will be this question number.
Fred, my video keeps breaking. Sorry. I
Is
think
it?
my internet is not very good. I said my video keeps breaking, so I'll hear your voice. I don't see what you're doing, or I'll see what you're doing. I don't hear your voice. One of them. So I'm unable to really follow.
Sorry.
But you don't worry, I'm on it.
Yeah, I'll push probably the video.
Please download from YouTube. Why? So please load it fast.
Yes, I'll do it
now.
right.
Here must come into the thing.
Right now. Good. Okay, so that is it. So this is how to appear for question number 1. It's well. So try question 2 for me. Question 2 is it well. This one is success. So that is it. And then you try this question. Yes, there's one question. It came in one of your settings. So that question is question 5. So let's go to question 5. And you try that one too for me. If you're able to try that one, question 2, it's well, and question 5, I think you are free to go until I come with my tough questions. So take note. Question 5 is it well. Good. So question 5 is it well. Try it well for me. I'll solve it when you are done with it. Or should we try? Okay, no, you have to try it first.
Question 5, Fred, question 5 where?
In the, not the standard, so the question 5 in the financial statement. The P&L note.
Question A is work hard limited.
Question 5. Have you seen it?
Work hard limited.
Yes, work hard limited. Note 1. Work hard limited. Note 1. Note 1 states that the company received a grant totaling 40 million during the year. Of this amount, 25 million was used to finance acquisition of modern machinery. So that's a capital grant. The rest to support the general administration of the company. That's revenue grant. I like that. So not all the 40 million grant is what? It is capital or revenue. You have to break it into 2. Capital 25, revenue 15. And all of them have a different treatment. So take note. The entire amount was credited to administrative expenses. Why? No, you can't do that. No, you cannot do that. So you reverse it. You cannot credit the entire amount. Not all. refers as what? Revenue grant. So you have to reverse it. So go to admin and debit it by what? By 40 million. So go there, take 40 million from it. Yes. With debit to suspense account, so the remaining portion was debited to suspense account. So that's the remaining portion is the other entry. So you take it over there, you add it to the cash, and then you start the treatment. The capital portion, that's the 25 million. Use 5 years. The estimated life is 5 years. So put 5 years there. The estimated useful life of the asset is 5 years. It is the policy of the company to recognize grants relating to assets as what? Deferred income and amortize over the expected useful life of the asset, which is what? 5 years. Even if they've solved it for you. Oh yes, they said amortize it. So that is it. So can you go through for me and tell me how you treat this? Yes. So this is the second question. The first question is the question number 2. It's well. When you are done with these 2 questions, then go to the standard handout. The handout that talks about the grants. That one to have a lot of examples in it. Kindly go and then treat all of them or do all of them for me. And then if you have any challenge, don't forget to bring it up for discussion. Thank you. Now your question time. I hope you get it. I hope everyone get it.
We are now doing.
You are doing it now.
We are doing it.
Oh, okay.
Fred.
Yes.
The question 1, the success limited.
Yes.
The question, for instance, it doesn't give anything in the form of number of years or anything. Okay, that's 5 years.
Yeah.
The plants have estimated useful life of 5 years. Okay, so it means that every time the number of years is given, you have to do the calculation for all the years fully.
No, not for all the years. So for that question, I think that the line wasn't working well. So this is how we did it. We said that the entire 20 million, we divided by 5 years. We had 4,000 each year. We are reporting for as at 31st of March 2019. So only that year, the very first year. So only 1 year.
Okay.
How we get that?
Yeah.
Good. So we get 4,000, go to other income. That's all. I mean, she didn't give you the cost of the plant because it has been capitalized in the plant calculation. So we came here, then we said that on the financial position, the entire grant is 20 million. And now we release 4,000, left is 16. Out of the 16, part is current, part is non-current. And always, the amortized one is the current. So the current is 4,000. So if 16 is total liability and the current is 4,000, then 12,000 is what? Non-current, and it ends there. So this is how it will look like. So it will, if like we check the solution, you see a grant of 4,000 other income, you see 12,000 of grant in the non-current liability, and current liability was 4,000. Then you are done. Good. I'll be get it.
All right. Yeah.
Okay, so that's fine. So go through all my works for me, and then you'll be fine. If still there's any challenge, when we meet again, let's try and then do it.
All right.